Welcome back, everyone. Michael here with Offshore Citizen. I'm going to give you a quick little update on the global minimum tax. There was some recent updates on, it was the 7th, 8th, something like that. And it's got lots of people talking, clients messaging me about it and sending me articles, etc. And there's lots of kind of nonsense media things out there. So we're going to dive into the details of that. It'll be quick, and what you need to know, what you need to worry about, what you don't need to worry about, and we're going to go from there. Before we do, if you haven't already, please hit the subscribe button, hit the all notifications. If you like this video, hit a thumbs up as well. And if you'd like help, please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below. I can help you with company formation, international tax optimization, asset protection, getting residencies, getting citizenships, figuring out what the right solution is for you, as well as actually doing it. You can also send a message to our website, offshorecitizen.net or offshorecapitalist.com. Okay, let's go. All right, well, first of all, let's talk about the narrative around this, let's talk about the update on what has happened. So the recent update is that pretty much everybody who was kind of resisting, most notably Ireland, Hungary, and Estonia, have kind of caved and signed. And some people might take that as being a really bad thing. I think it's worth noting what the provisions were in order to do that. So first of all, there's like a 10-year grace. So the idea is that they're supposed to implement it into law domestically, because what's happened is they came up with this idea for this treaty. Now they've all agreed. Now they need to go back to they have to go to the G20, and the G20 has to agree on it. Then they have to ratify it at the G20. Then they need to go back to their local lawmakers and try and implement it in local law. And there are some concerns, it's not concerns for us, but concerns for the treaty that, for example, the Republicans in the US don't agree with it. They need 67% majority or vote in order to get it through for bringing in treaties in the US, and they've only got like 50. So as a result, that's an issue. Interestingly, Biden is apparently mulling the idea of using some executive powers to bypass the Senate on it, which would be pretty dirty. It's like kind of, I don't even know how they would tolerate that, but anyway, flaws in the system. The system is having some issues, obviously. Anyway, so you've got that, and a bunch of other countries where they're kind of objecting, right? So we'll see how well it actually gets implemented into various countries. Probably some of them are going to be snappy on it, right? Places like, I don't know, France is going to probably be, all over it. Although some places are saying that, hey, listen, it lacks teeth, and the lacking teeth is part of what we're going to talk about. So one of the things is there's like this 10-year phase-in, okay? So 10 years is a pretty long time, even though they say that, okay, well, it's supposed to be implemented in 2023. They have a 10-year grace period. So pretty long time during which it's not so much of a thing. Now, it does apply at this point only to multinational companies earning $750 million or euros a year in revenue. And so that's, not going to affect most people in this channel. Hopefully soon, some people's businesses will grow, but my business certainly is not affected at that level yet. I expect that, it's the start of something, and they're going to kind of use that to slip in there, right? This being said, so that's one thing. There are various different carve-outs and exceptions, etc., which kind of make some issues for people where they're saying, okay, well, what's really going on here? And so that's also going to play a role here. One of the things that they may get some objections to in general is that part of the deal is that various countries have to repeal various existing taxes they have. And this thing I'm going to point out, because I've heard lots of people, the PR, what Janet Yellen is saying is like, oh, this is going to bring in prosperity, $150 billion in extra tax revenue over whatever period of time, and blah, 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 right? Complete propaganda nonsense. Why are they actually doing this? You might think it's like, hey, listen, we're trying to crack down on these tax people. I don't think this is the case at all. What's really happening is, because let's just be honest about what happens, right? If you think that Janet Yellen is some wonderful, idealistic, do-gooder, if you think of that as good, or even a socialist, I think it would probably be naive to say that. Most of these people are kind of corporate shills. There's lots of lobbying. And you'll notice that big tech does not object to this. Big tech is actually saying, hey, listen, we welcome it. Well, why do they welcome it? let's look at the trend of what has been happening. So one of the things that I notice is I see lots of news articles from people who don't do anything with international tax. They don't understand international tax. They've never done international tax strategy. What the heck do they know, right? So I deal all the time with that. That is our business. And so I get to see that, hey, UK has introduced a digital services tax. This digital services tax basically exclusively targets the big tech companies, which aren't UK companies, note. They're American companies. And there isn't an equivalency that's very useful for them between the US and UK. Spain is going in that direction. A bunch of different places have been going in this direction of bringing in these taxes against these big digital companies. And what does that do? That effectively creates double taxation. So one of the arguments they're saying is oh, listen, so here's the way the tax is supposed to work. They say, well, countries can charge whatever they want domestically, but if they don't charge at least 15%, then the home country can top that tax up to whatever the level is. Well, the bizarre thing about this is, generally speaking, something like the US GILTI tax already does something like this. In fact, it's kind of worse. What it does is it says, all right, if you have money that exceeds the threshold, which is 10% return on tangible assets, then we're going to tax you at a rate of 10.5% on that money. So it's like, okay, well, they're already, even if you paid taxes, by the way, unless you're up to 19%, we're still going to do this to you. So if you were paying 12%, you're now paying 10.5% plus 12%. So now you're at 22.5%, which is actually worse than the corporate tax rate in the US. And countries have had this ability for quite a while, right? They've been able to say, hey, look, we can do this. Now, the thing that's happened as part of this deal is that I think basically the lobbyists from the big tech companies actually went to the US and said, hey, we need to stop this digital profits tax. And the deal that was made was they said, hey, we don't want to end this. We don't want to have you taxing our American companies in your country prohibitively. So here's what we're going to do. We're going to change the way we attribute income. We're going to allow you to attribute some of it to your country. And we're going to put in this minimum tax. But the trade is you need to get rid of these other taxes. Very conniving. Nobody's sitting there saying that, but literally that is what is happening, because part of the deal is UK and these guys have to remove their digital services tax. So does UK win in this arrangement? Who knows, right? You have to do the math. But it can be dressed up in this very nice blanket of, we're preventing tax evasion, et cetera. No, really what's happening is that these big companies now aren't going to be hit with this same double tax by people kind of etching out profits, as well as the tax complexity, right? Because all these different countries have their different rules for how they grab these digital profits, et cetera. And, as a result, that big company is fine paying it anyway because it's shareholder money. So it's not the end of the world, but at least they get to save a little bit because conceivably what will happen is that they'll just go with, it actually may do the opposite of what these guys are saying, which is kind of interesting. Anyway, that's the story that a lot of people aren't talking about, but what they're mostly putting out is a bunch of propaganda, it's a bunch of nonsense, as well as you just should never try and learn about taxes by reading articles from any media publication. Media publications don't know anything about it. So the devil is in the details. I think that it's highly, highly likely that what ends up happening, we'll see the actual legislation. I've only read kind of preliminary stuff on it, and so what actually gets passed is what's important. But I suspect what you'll find is the lobbyists will be hard at work to carve out various different provisions, and what will get passed will certainly not be something terrifying for these big companies. Fortunately for the small companies, it doesn't affect them yet. Like I said, there's various different exceptions and carve-outs and things like this, and we'll see how that goes over time. I do think that we have this trend of going after, you have a rising wave of nationalism and a rising wave of sort of socialism, right? So these two things together are going to basically try and bring money back, contain the money in the country, and result in taxation. But, I don't know how effective this particular piece of legislation will be. If it is, what you're going to see is people moving a lot more so that they just don't have to take advantage, or at least on the small business side. so they don't have to be hurt so much by it, because it's going to incentivize a lot more putting your people in the countries where you can go and you can just say, hey, listen, we're just going to be totally in UAE. We're going to be totally in, some other favorable place, so we don't have to deal with this other nonsense. In some cases, they won't be able to do that, companies like Facebook, etc. But a lot of companies will. So anyway, I hope that helps. Hope it gives you some ideas. If you'd like help on any of this, again, please reach out to me and give the video a thumbs up, and we'll talk to you on the next video.